Hello, my name is Jose Perez. Along with Josue Gomez and Armando Alcala, we are team number 8, and we have completed the StockTrak project. StockTrak is a virtual trading application for university finance students. It demonstrates and gives examples of the real-life stock market. We were given $100,000 to invest in the virtual stock market, and then an additional $100,000 if needed. Being novices, we did not know what we were getting into with this project. The first couple of assignments that were delegated to us were to try and help us understand the top performers in the stock market by seeing their indexes and returns. From there, we took that knowledge and saw that the technology sector was doing really good, so we chose that was what we would chase after. We were hesitant at first, but then got comfortable and started buying and selling more stocks as the project went on. In trying to name our team, we decided to name our team Making Dollar Bulls, which makes sense since the market has been a bull market for a while now. A bull market indicates that the share prices are increasing and it encourages buying power in the market. So over this course, we learned a lot of concepts and terms that have to do with finance. One definition that is important when investing is that of betas. Betas tells you the relative risk of a stock has and in the market. If a company has a beta higher than one, it indicates that the risk of that stock is high. If it is less than one, the data indicates that the risk of the stock is less. With a higher risk, you get a higher return, and with the less risk, you get a less return. Our goal was to get a 4% return on our portfolio by investing in risky stocks. Some of the technology stocks that caught our attention from the beginning were that of Amazon, Google, eBay, and Tesla. These four companies were our stepping stones for us because we wanted to invest in stocks with higher betas to get a higher return. Google made us a return of 1,129 and Amazon 1,659. These two stocks were also our primary stocks and the ones that we kept for the longest, and they were also our most profitable. We ventured into the penny pinching stock with eBay by buying it at low cost and then selling it right after because they weren't producing much more. But these stocks also hurt us because we held on to them too long. We also invested in stocks that were in the news because they foresaw a good return on them, such as Chipotle. Overall, our portfolio gave us a negative 19.1% return, which did not surpass the portfolio goal of annual return of QQQ of 4%. This meant that our investments were not chosen properly and that our research on the stocks was not extensive enough. Looking back on the StockTrak project, we learned positives and negatives in the investing. The positives, we saw high returns in the market, and then the negative aspect, we saw the fluctuation in the market, which gave us a less return on our stocks. We also saw how vulnerable the stock market is to news and politics, and how heavily it impacts the decisions that stockholder makes and the impact that it has on the purchasing power. We are also glad that the money that we invested was simulated, not actual money. If we were asked to do this project again, we would definitely do it. But the thing that we would do different is not to hold on to our stocks for too long because how unpredictable the stock is, and also to do more extensive research on the stocks you invest in.